This is the first week where we're starting Frugal Fundamentals, 6-week workshop. We still got some people coming in, but in the meantime, I'd like to introduce Carlos Diaz Jr. He's a wealth advisor, and he's also a contributor to publications like Forbes, MarketWatch. Came out with a really cool article recently on MarketWatch. I'll ask him to share that in the chat. But so this week the focus is money management. And we're just going to talk. There's going to be room for people to ask questions. Earlier today, we had Taryn Bushrod, a money coach, on our IG Live. That was a great conversation. So we're trying to extend that to this Zoom platform. All conversation will be recorded. You can ask questions as you please. We'll try to get to them. We'll definitely get to them because there's space for that. But yeah, so a little bit about myself for the people that don't know. Amobi Okugo, a professional soccer player, founder of a Frugal Athlete, essentially an online media platform that promotes prudent financial practices and smart career decisions, do speaking engagements, workshops, some small-time financial coaching, and helping athletes realize that different ways to make money through their brand and different ways like that. But it's a pleasure to have everyone on. Also, as part of this Frugal Fundamentals series, we've partnered with a good friend of mine, life coach, character coach, Jonathan Van Horn. So I'll definitely share his information in the chat. He's given out a discount to all participants that are interested in his SHIFT program. Essentially, it's helping athletes transition and kind of finding out their purpose in life outside of sport. So that will definitely be in the chat when I get to the link. But let's get started. Carlos, you can take yourself off mute if you choose.
You should hear me well.
Oh,
correct?
yeah, I can hear you now. Perfect. So yeah, Carlos, let's just start with a little bit about yourself. How you got to where you are, and go from there.
Yeah, appreciate it. So I started in the financial services industry in 2005. Coincidentally, I was shown an opportunity originally, and I liked the financial services industry. I just didn't like the cookie cutter approach that was shown, that they took with every client. So ultimately, I ended up starting with a lot of older clients. I worked for a company called Bankers Life and Casualty, became a unit manager, actually learned a lot about the insurance industry and a lot of things that you don't want to do. And after that, I decided that I wanted to leave. I wanted to expand. I had a little bit of time with New York Life. They had told me one story about how we could essentially be independent and do the best for our clients. I quickly realized that wasn't correct. So 6 months later, my wife and I went off on our own. We started our own company. We started in a very small town. And I always had a vision for a much larger audience and to be able to get a hold of more people. And of course, technology back in 2007 was nowhere where it is today. So a lot of people are at a great advantage. But we decided to relocate to the Orlando area and open our own registered investment advisory firm in the process, and been working with clients, and especially in the professional athlete market, since 2011. And it just started, I usually tell people that everything started with just a vision and absolutely no contacts whatsoever. In fact, only one professional athlete came out of my small hometown of Palm Coast. He ended up playing in the 2006 and 2010 U.S. men's soccer team. And we probably know who that is. But so I didn't know anybody, and I had to just get out there and meet people and expand my education. And that's exactly what I did. And this is where we're at today. In the meantime, I've been blessed to write for some prestigious outlets, Forbes, MarketWatch, Kiplinger. I'm doing some instructing right now. I teach CPAs, a lot of the same concepts that I do with professional athletes. And I'm also in a speaking role.
Yeah, that's amazing. It's been a pleasure to know you over the years. You talked about, you starting in 2007. Obviously, 2008, 2009 was, the last time, the economy was kind of in a downturn. And obviously now, in light of the situation with COVID-19, we're kind of in a, I don't want to say similar situation, but, there's some similarities there. So what have you been telling athletes in terms of when there's a situation like this? How do they like create their fortress? How do they create a financial fortress to protect themselves when things like this happen?
Yeah, so I started a little bit before 2007, 2005, so I was able to see a little bit of the upside, kind of like what we've been seeing in the last couple of years. And then 2007, 2008 hit, and I learned a lot in that time period, and that's how I apply my methodology to a lot of my athlete clients, is that you need to make sure that you look ahead, that you have a vision for in the future, and you prepare yourself, because not everything will be great or good all the time. You're going to have a lot of rough bumps along the way. You may actually have even a whole lot more than some other people. And you just really need to prepare yourself, and you need to make sure that you have enough saved up to patch those holes along the way so you don't get yourself in any kind of financial difficulty.
Yeah, so when you say like saving and there's different strategies around that, athletes and specifically, the NFL draft, these are, overnight millionaires. They have a lot of like, cash flow. Like,
Yeah.
so how do you get them to kind of get that mindset into long-term thinking?
And a lot of times that is a little bit more of a challenge, because a lot of them go from having absolutely no income as a student athlete, and then all of a sudden jumping into possibly millions of dollars via a signing bonus. So a lot of it's getting that mentality. In fact, some guys that I was informed recently, guys that just went yesterday, just opened up a bank account maybe about 2, 3 weeks ago. So in my opinion, they have a lot to catch up on, but you definitely can get them there. They just have to be willing to be coached, because there are a lot of what I call sharks around them that want, those people want them to do what they want them to do. They have an agenda. And so if you're going against that agenda, sometimes it might be you're swimming against the current.
Yeah, and you mentioned sharks. Obviously, you had a really good article on Market Watch about athletes, especially specifically because it happened most recently, the NFL draft. That there's a second draft that happens. Choosing your financial advisor. So, what questions should an athlete or anyone for that matter be looking to ask to really find out if that financial advisor is or that financial manager, or if that financial professional is good for me.
Well, a lot of my questions that center around have to deal with background. You want to know a lot about the background of the actual financial advisor. And a lot of times you want to ask them what they call for a form ADV. And ADV is just no more than a disclosure brochure. And that'll give you a really good idea of who they are. You really don't even have to ask a lot of questions based off of that form ADV, because it will tell you a lot. You just have to decipher it and go through it. There's certain sections, they'll tell you how they get compensated, what licenses they have. But the best thing that I always tell people is get everything in writing. You want to make sure that you get everything in writing. In fact, I have a form that I'll fill out for clients, or I'll provide them to people in order to go out and give it to their financial advisor. And that will really solve a lot of the problems that are out there, these potential problems. But part of the conversation really is, do you even need me? Do you even need a financial advisor? And really what I just wanted to bring up is that the dictionary says that a financial advisor is a person who is employed to provide financial services or guidance to clients. And the problem with that is that there are a lot of people that call themselves financial advisors. So that term is very loosely used. We really don't know if that's someone that does bill pay or works at a bank, which I've seen now a lot more lately, to maybe somebody that provides investment advice or is just flat out selling you products. Could be an insurance person. The word financial advisor is just being totally misused. But through those questions, you can find out, again, what kind of licenses that they hold, what kind of fees they're charging you. Ask them exactly what they're providing you for those charges, because if, in my opinion, if there's something that they can provide, some guidance, some strategies, then their fees are worth it. But if essentially all they're doing is just holding on to your money, maybe investing it, then at that point, I don't even know if you really even need a financial advisor. I mean, you can essentially do a lot of research on your own. I would say that the most important thing that we have today is technology. It's almost like technology is a positive thing, but it's also a crutch to a lot of people, because We'll go on, we'll do a TikTok video, Instagram, but then we have Google that we can do a lot of research and get a lot of preliminary information. And then we don't end up doing that. And there's a lot of free sites that are out there that we can look up information, and we don't do that. We heavily rely on someone like maybe an agent or an attorney or someone else, or maybe even a family member that has very limited knowledge in the field, and they'll just ask very basic questions, or maybe I would say outdated questions. So, I mean, I could probably go on with this particular question, but the interesting thing is that you want to know as much as you can about your financial advisor. You definitely want to find out if they have any complaints, if they had any financial problems, and the majority of that is already online as it is for free.
Yeah, so you mentioned it being for free, and it's a great topic because I talked to Taryn earlier this morning about the resources. As athletes, though, we know financial literacy is not a strong suit. So in terms of resources, in terms of like questions, you mentioned fee only, fiduciary. Give us like a rundown of what exactly like those terms mean.
Yeah, so fiduciary means that they're working in your best interests. The problem with that word, and I have this conversation quite a bit, is that the word fiduciary in general, just like the word financial advisor, is being misused. So you have a lot of financial advisors that say, oh, I'm a fiduciary. Well, that's because they carry at least one particular license that labels them as a fiduciary. But then they may hold a lot of other licenses. So for instance, my license, and the easiest way to look this up, I'll just go ahead and give away the website. It's investor.gov. That's the easiest website to navigate. You go to investor.gov, you put in the financial advisor's name, and it'll populate. It'll show who they are. It'll say investment advisor. If it says broker underneath, that means that they have multiple licenses. So you have these licenses like Series 6, Series 7. That's nothing more than just to sell product. That's it. And if a person's calling themselves a fiduciary and they have all these additional licenses, then there's really no fiduciary duty, because the duty is into the company that you're working for, not to your client. So to kind of wrap this up, fiduciary means that you're working in your client's best interests. There's another term out there when you have multiple licenses. It's called Suitability Standard. And with Suitability Standard, it means that when you sell a product, it just has to be deemed suitable enough. And that's where a lot of these cases, I do a lot of research on cases because I just love this field altogether. And I look up a lot of these cases and I see cases that are settled for essentially pennies on the dollar. That's because, or they're denied. That's because of the suitability standard. The suitability standard lets these companies get away with selling products when they should be out there working in their client's best interest.
No, thank you so much for sharing, because I think it's important that, when athletes are in this situation, they don't really know, what to ask. And when they're getting the answers, they don't know, if that's a good thing or a bad thing. And especially, like you said, with all these credentials by the, a financial advisor's name, it could kind of, how can I say, gloss what they actually do. So it's important to be able to read through it and understand. And I want to ask this question too, because, not every professional athlete is making millions of dollars. There's student athletes that are involved as well. So, like, what's a strategy that you would recommend for an athlete at any level? Student athlete that may potentially go pro, a young rookie in a lower league, or like in a in a league that's not like the NBA or NFL. What strategies would you recommend for them from a financial standpoint?
So let's just address the student athlete first. I had a student athlete that reached out to me. He said, hey, I receive a stipend every month. What should I do? And I said, okay, well, the best thing that you could do is that you may or may not go into the NFL. That's a given. And what you need to do is you need to make sure that you start calculating at a minimum all of your expenses now that you need. Probably start doing some research if you had to go out and maybe rent an apartment, whatever it may be, and calculate your expenses. And you need to have a minimum of at least 12 to 16 months of expenses. As a business owner, so if you want to get into the business world, I would easily say that you need 16 months worth of your expenses. Now, if you have $2,500, that's $40,000. That's a lot. That's a big hurdle to jump. But if you do it in small increments, you can get there.
Mm-hmm.
And then the other thing I would say to the actual professional athlete that's maybe making league minimum, you still are at an advantage because you are in a super high tax bracket. You're practically in the top tax bracket. Actually, you are. And there's a lot of opportunities that you have, because I noticed that a lot of professional athletes are charitably inclined, and they live in maybe certain states that are friendly with state income tax. They have no state income tax at all. So I would start off by saying, one is live in a no state income tax state. That's probably a really good start. And we'll talk about something else in just a quick second. But also, you want to make sure that you are allocating enough to savings, and then also focusing on the charitable side of things. So if you are charitably inclined, you need to start doing things. And especially this year, I just wanted to quickly point out, I had a quick lapse there of memory. You have this CARES Act that came out that essentially they are allowed to deduct, they are allowed to contribute 100% of their adjusted gross income. So it's a big tax advantage this year to look at some charitable vehicles, possibly. So with anything and everything, you want to make sure that you evaluate things. Take suggestions and take ideas and evaluate them. Because if you don't evaluate and you do something, then maybe later on down the road you might say, that was a really bad idea. But if you evaluated it and it made sense, perfect, go ahead and execute it. The last part I'll say is the asset protection. So you want to make sure that you work with a qualified attorney, of course, and part of this. But if you live in a state that has really great asset protection laws, for instance, Florida, at some point or another, a lot of us will be sued, whether it's medical debt or whatever it may be. And professional athletes are going to be, unfortunately, part of that group. And so asset protection is going to be really important, because you're going to be allowed to keep as much as possible because you did a lot of planning on the front end. And it's like, I usually say, well, if you investment that you only earn, let's just say 3% on, but you were able to protect 100% of your assets, is that better than maybe an investment that you earned 12%, but it was exposed to potential creditors and you ended up losing either a majority or almost all of it? So you really have to start thinking from a calculated mindset of what you're going to do right from the start.
No, I think it's important that you said that, asset protection, as athletes, whether it's bad tweets or a picture that gets exposed or someone trying to sue you for over a trademark, all these different things, it's important to have a solid lawyer on your team. Can you talk about like team, everyone, a financial professional on your side, a lawyer, a manager? Can you talk about how important that is for an athlete at any level?
Absolutely. So I think that the team should always comprise of, you always need an attorney, and especially if the athlete has kids, it's really important. There's a part that you want to do, it's called estate planning. Because if you're unfortunate like Sean Taylor and you pass away before you were supposed to, then you have your affairs in order, and it doesn't have to go through a court system in order to determine who gets what. Part of that also includes, for instance, like now that we're on the subject, maybe with NFL and let's just say retirement plans, you want to make sure that you check your beneficiary forms. Anything that's 401k, IRA, life insurance, annuity, etc. They have what they call a beneficiary form. Make sure that those are updated correctly, because if you don't have the right beneficiaries, guess what? The ones that were on there, they will receive your money. And let's just say things have changed in the last couple of years, then you're at risk to potentially giving somebody that you didn't want that money. But going back to that, so an attorney, I would say, is probably top, right along there with an accountant. And I'll say the right accountant. You have two different types of accountants. You have tax preparers and tax planners. You want to work with a tax planner, someone that has a lot of forward thinking. Because if they're just looking at what happened last year, then guess what? There's no planning strategies available because you're just in the new year. But if you're working with somebody that's looking out for you into the future, then you'll know that they're planning on your behalf, looking at a lot of different options, whether it's contributing to certain types of retirement plans, or opening businesses, or charitable options. There's a lot of little different things that they can implement, because of course their sole income is not only going to be from their NFL money. It's going to come from endorsements, speaking engagements. So you really need to position yourself the correct way right from the start. And then right in there somewhere, you could have your financial advisor. But in a sense, you can also use some of these discount brokerage firms like Vanguard or Fidelity. And I know for myself, I know I'm right here getting rid of a lot of the business, in essence, to not say, oh, financial advisor needs to be the number one. But again, if the financial advisor is providing value, then yes, you have a financial advisor because they're looking out for you. They're almost like the term that they've started using a lot more is family officer. They're looking out for you. But if all they're doing is just selling products, I mean, like I said, you can just do that yourself.
No, that's important. I think what's really important is how you said the two strategies: someone that's forward thinking and then someone that's like looking in the past. I think as athletes, it's a balance between playing offense and playing defense. And for the most part, athletes, we don't really think past our careers because we think we're going to play forever. And that's kind of what happens in the sense of struggling, with that transition. It's really unfortunate, but you're starting to see the shift starting to happen. And you mentioned business. I'm really interested in what you think about business because athletes are starting different businesses. So can you talk about, your opinion on it and like where you see it going moving forward?
I love it. I love a lot of let's use the word forward thinking again here. A lot of the athletes like LeBron James have a lot of forward thinking where they're involved in multiple businesses. Now, the important thing to business is that you can have 50 businesses and they can be all not profitable and they can also lose a lot of money as well. So you need to make sure that you either align yourself with the right people that are going to help you in your business, or you need to start doing a lot of research. Again, that's kind of like the key word here. But I love business. I've been a business owner since the age of 18. I've owned real estate. I love real estate as well too. I know a lot of professional athletes love real estate. I know that certain cultures, I have a Portuguese background, they love real estate as well too. And I especially like franchising as well. That's something else that's been really taking off a lot recently. You hear about the junior Bridgemans that have made almost nothing in the NBA many years ago, but have built and amassed a lot of wealth in franchising, 400 million plus. So it is doable. I think part of that is you also have to have some sort of love for what you do, because if, for instance, you don't like that, then you're probably going to dish that off to somebody that may ultimately rob you. So I guess I would probably say do what you love, and part of having enough saved up is to be able to have that transition, or what I call the buffer period, to be able to really figure out what you want to do and move on in life.
No, thank you. I think that's really important. Yeah, Junior Bridgman. When I first started Frugal Athlete, he was an idol of mine. He only made, when it came to career earnings, or the highest yearly salary he made was 350,000, and like what he did after to build a net worth of over 400 million just shows you not only the success that athletes can have if they, put their mind to something else, but the opportunity that there is in the business. So, a lot of athletes get a lot of deal flow. They get, whether it's their cousin's car wash, a friend's restaurant, this guy's new startup that's going to compete with Uber. What are what's the criteria when it comes to deals? What should they be looking out for? Like, if this is a red flag, what makes a good deal? What doesn't?
That's kind of it's an interesting question, because ultimately anything could become the next Amazon or the next Netflix. And if you played it maybe too conservatively, you may say, you know what, I had that idea a long time ago and I didn't run with it. But I would probably say that in order to evaluate a business deal, so for instance, from a franchise standpoint, you want to make sure that you work with a lot of reputable companies And for instance, let's just say that you don't like anything to do with restaurants. You probably should stay away from the restaurant business altogether, because even right now during this pandemic that we're having, the restaurant business is taking a big hit, and a lot of other businesses in general are taking a hit as well too. But part of it is you need to make sure you look at it and just know that it's not going to become someone else's cash cow.
Mm-hmm.
So, but part of that also comes from the passion. You know, you have to really know what you want in life. Evaluating it, I mean, there's so many different ways to evaluate it, but obviously it's been covered a lot before in the past about maybe staying away from car washes and restaurants and all these eccentric investments that are out there. They take a lot of sweat equity and the profit may not be there. Now, I'm not the type of person to just go ahead and discount certain things. I think that everything has value and can potentially become a gold mine. But there's an element of work ethic in there, and there's an element of understanding what you have and that aligning that up to your passion. And if a lot of things don't line up, then it's probably not a good business deal from the start.
Yeah, my dad always tell me, if you're not passionate, if you're not good at it, then you shouldn't do it. So I think that's sound advice, because if you don't have a passion for it, how are you going to get up every morning to really commit to it, especially when there's, the bad turns and, some adversity. So it's really important to not only be passionate, but, good at it as well, and the passion comes
and I'll
first.
just bring up just a really quick story. Many years ago, I lost $50,000 on a real estate deal, and that really hindered my growth maybe on the real estate side from maybe finding something else and keep going with it at the time. And that's the thing. Life in general is all about trial and error. Just because something that works for both of us doesn't mean it's not going to work for someone else. It's trial and error. There's a lot of things that I did in my 20s as a business owner that I look at it now, I'm like, wow, that was not a good idea. Certain things like paying things all up front. That was one of my things from the beginning. I said, I want to make sure that everything is paid off right from the beginning, and I don't have to deal with it anymore. That was not a good idea. And a lot of things that we're going to go through, they're trial and error. And so again, and part of that saving, you need some of that to kind of grow and develop. If you're learning through some of these mistakes, then you're going to learn a lot sooner than maybe somebody that's just being advised and maybe takes the advice and is saved. At some point or another, it'll all catch up. So I think a lot of trial by error is great, and really learning a lot what has happened, how businesses failed, etc. Again, expand your mindset, expand your education.
No, I think it's really important you said that, because I was talking with the financial advisor, and I literally asked him, like, so how do you, convince your athletes to, stick with you and understand like the parameters of a budget? And he's like, you got to give them you got to give them money to spend too. It's like when you're teaching a kid, you want them to eat their vegetables, you got to let them have some dessert too. So sometimes, you got to, touch the hot stove to know when you make a mistake. And it's important that you just keep it within reason and don't put yourself too much in a hole. So I really, really appreciate your honesty and you sharing that story of you losing, because not every deal is, positive. And I feel like we need to hear those stories as well. Obviously, I would love to promote as many positive stories as much as possible, but sometimes you need to hear those too.
Yeah, I agree. And then the other thing I'll say about it too is that let's just take what's going on right now with COVID-19 and coronavirus. You have a lot of people that are out there that are saying, oh, this is really nothing more than just maybe the simple flu. And then you have other people that are saying, I had a family member that either passed away or that was in the hospital and really understands the intensity. And just even basic things as, washing your hands. Those are just simple things in life that we should just know. But for some people, it's so much more of a challenge to get over it and finally start doing it. And again, it goes to the whole trial and error. Some people are good with taking advice, and other people need to live through advice. They need to live through their own challenges.
Yeah, and that reminds me of my earlier conversation with Taryn. It's just like, everyone something fits everyone's style. You can't say this is how you're going to, budget. This is how you're going to save. This is how you're going to invest, because everyone has different styles. Everyone has different strategies, and it's important to understand what works best for you. So before we tap into questions, I want to, let you share not only where people can find you, but a last piece of advice for athletes.
Okay. So the way that people can find me, you can easily find me all over the web. I'm on Twitter, Instagram, Facebook, LinkedIn. If you want to just simply go to Google and type in my name, Carlos Diaz, D-I-A-S, and then put Junior, J-R, you'll pull up my personal website. It has all my social media on there. Personal website, you'll find my Kiplinger profile, Market Watch. I'm all over the place. The last piece of advice that I would tell, especially young professional athletes, is it's your money. There's not going to be anyone else that's out there that's going to care more for your money.
Yeah, it's true.
So you need to make sure that you watch out for yourself, because there's not going to be one person that's necessarily going to look out for you. You need to take accountability.
Thank you so much, Carlos. We really appreciate it. We're going to leave it open for questions. I don't know. There's not as many people. There's a lot of people that registered, but obviously there's IG lives, there's Zoom meetings, there's a lot of things going on. So
and
for the people that are on
too.
Oh yeah, the draft is going on. Oh, we should have thought of that before. Oh well. So if anyone has any questions, please share them in the chat. I'm going to share the link for Jonathan Van Horn's shift course. And if this is a great course, if you are thinking about for athletes that are involved, looking to find their purpose, because once you find your purpose, things tend to be clear in your transition, even on the field and off the field. So I'll be sharing that. Carlos shared his information. I'll be sharing the link to his latest article as well. But yeah, we're going to be doing this every week. We really appreciate you, Carlos, for the first iteration, money management. I think that's really important. The better
Thank you for having me on.
Money.
And anytime, I love everything that you've been doing. I've been obviously following your platform for a long time. We had radio. We did some radio or podcasts last year. So I love everything that you're doing, and I want to make sure that your content keeps growing and keeps succeeding.
Thank you so much. Yeah, we're definitely going to have to tap in. I'm trying to get on your level. Forbes, Market Watch, Kiplinger, all that. So, no, I really appreciate those kind words and you for taking the time. We got a question here.
I had a quick question. Someone said, someone asked about insurance.
Yeah,
I don't know if do you want me to address that question?
Yeah, I'll just read it out. Hey, Carlos, thanks for your time today. I see you worked at NY Life. Do you see insurance as part of someone's financial plan?
Absolutely. And I should have addressed that right before, and there's a thought that went out the door. And especially there are some guys that are out there that have kids. Insurance is definitely an important part. In insurance, when you say insurance, I mean, obviously you have homeowners insurance, car insurance, you have umbrella insurance. That is through what they call a property and casualty agent. Definitely want to have that because it's like we said before, people are very, very sue happy. So it's great to have an umbrella policy on that side. But insurance in general is very good to have, especially life insurance. At a bare minimum, term insurance, because it's very inexpensive and you can get a lot of it. And if you do unfortunately pass away, you can leave it to your kids or your significant other, wife, etc. And then also, I would also suggest for NFL players, long-term care insurance. I know that the league does provide a policy and you want to make sure that you take advantage of that, you tap into that. But a long-term care policy, only because at some point or another, unfortunately, football players especially, there's a lot of movement going on in their brains, and especially with their bodies. I mean, I know a lot of friends that are former NFL players that they are 40 years old and they're just completely out. They can barely walk. So having a long-term care policy will help you later on in life whenever you need some assistance. And inside of that, I don't want to go too much into detail. I actually have a course on this on one of the sites that I do for accountants, CPA Academy. You can actually register for that course. But what they call a combination life insurance and long-term care policy, that may be a good fit too.
No, as someone told me before, insurance is, no one wants it until you need it. So always make sure you got insurance to protect yourself, and you alluded to the NFL, especially with the new CBA, it's not really taking care of the retired players. So the insurance policies that you suggested would definitely help them in the long term.
Yes, and then of course you also have your disability insurance, but it's like that saying that goes, you don't have too much insurance and you're cash poor, you're insurance
Yeah.
rich, cash poor.
That's true. That's cool. But if there's any more questions, don't be afraid to ask. That was a great question, Alex. Thank you for joining in. Gil, pleasure to
And by the
meet
way,
you.
too, if I could just throw this in there as well, too, there's another interesting thing that I forgot to mention about, especially with the New York Life and the Northwestern Mutual. You do get a lot of advisors or insurance agents out there that like to push the product and say that it is the best, when in fact it may not be the best. And that's the problem that I ran into at New York Life, is that their product had to be put in front of the line first and foremost. And if for some reason the company denied the client, then you could go to other companies. And I did not like that because I know that there's not one particular insurance company that's a fit for everyone, your State Farms, et cetera. Just like the same thing on the financial side, there's no one broker or there's no one investment that's always going to be the best. Everyone's going to have everything's going to be different. Everyone's going to have different prerogatives in life. And it's important to align yourself with someone that's not really biased towards one thing.
No, that's really important. It's really important. It's like when you're at the mall or grocery store. Imagine if there's only one water that you have to get, and that's not the case. So at least to have the option to choose, like you alluded to, I think is really important. But we'll give it a couple more seconds for any questions. But with that being said, once again, Carlos, we really appreciate you coming on. Next week, we're going to be talking career development. For the IG Live, we got Darren Roberts. He has a crazy story. Lawyer to NFL coach to educator. He's going to be on the Instagram Live. And then we might have a couple guests for the career development Zoom session. Donovan Smalls, student life coach, and then possibly a former NFL player that's a transition coach as well. So once again, thank you guys so much. This is the first week to see the support for both the morning session and the afternoon session. It really means a lot. But yeah, with that being said, we'll let you guys get to your weekend. Have fun, stay safe, and we'll keep in touch.
Have a great weekend, and thank you for having me on.
No, most definitely.